Hello everybody, it's your boy Lumenaddy. Today's January the 30th, and let's get right into it. What a day on the charts. What a day. If y'all were following the charts today, you must have had a swing of emotion because I know I sure did. So let's recap a little bit and then let's dissect it. On the daily, currently, we are seeing what could be a hammer formation, and I'll go over what that means of this candle right here. But our previous day candle ended. Let's zoom in a little bit. Our previous day candle ended just below the 4809 level. It did test below that. It tested this retracement level, which I believe is from, is the 50% level of the retracement that we drew from the all-time high to the pullback that it had all the way down. So it was the 50% retracement level of that, and the price bounced from that, and it closed close to the 4809 level, which is the 1.618 level from the previous retracement that we drew. Okay, so after that candle, though, however, today's current candle showed price dipping back down in a hurry, and then now has seemed to have pulled back and formed this long wick. And you remember in our previous videos, we discussed that anytime we're looking for price reversals on the daily chart, we are looking for long wicks. And I will go into a little bit more detail on that today because I think there's a lot we can learn from the last 24 hours to kind of put the picture together. Now, when we ended yesterday's video, what did we say to look out for? We said, look at key levels, key retracement levels. So we had our retracement levels, and we looked to see would price bounce off these retracement levels or break through and continue breaking through. That was number one, right? Then we said, be aware of major confluence levels of retracement levels so that we know that that's an attraction for price, right? And the last thing we said, look at volume, right? No, sorry, there was another thing. We said look at volume. The last thing we said was look at the stochastic RSI on the daily. Make sure it gets to 20 or below to give an indication of a potential reversal, right? And we wanted aggregation of all these indicators to give us a wholesome buy signal to then go in for a trade at key levels that we were looking for, right? And this is all for short term, because long term, if you just put in a buy and you hold on to it, with Lumen going the way it is, it's eventually going to be profitable. But for the short term traders, these were the aggregation of signals that we were looking for. So let's break it down one by one. Let's go by retracement levels. Key levels that we're looking for was this level right here, which had the confluence of two retracement levels. So around 50.29 Satoshis, right? Price clearly broke well past that. Then the next level we discussed was this level right here, which was at 4809, right? And I don't know if we talked about this level, but we had definitely drawn it in the previous videos, and that was the 50% retracement level of this retracement that we had drawn. So these are levels that were present on our charts that we had to look out for, and on the smaller intervals, like at the 4-hour intervals, it tells the picture really well because, as you can see, price was dipping down, right? It continued to dip. It touched the 50% retracement on the 4-hour. It broke right through. It came back and touched it, right? Like we said, this is a magnet for price, so price definitely did touch back there, and then it continued to retrace down. You see these long wicks, and that's an indication of price being attracted to this level, but continued to close lower. Then we saw a massive dip down, touching this 1.618 level at 4809 Satoshis, and we see this massive range in price, right? And the way it ends, it's called an inverted hammer candle. The following candle, the way the price ended, this is called a Doji Candle. And I'll go over this a little bit. And current candle forming, it has an hour and 5 minutes left on the 4-hour chart. This is shaping up to look like a hammer candle. And I'll go over all what that means. Each of these candles, they're Japanese candlesticks, and they seem to indicate certain things when they present in a certain manner. And so I'll break that down with a rough guide on that. But let's go to the lower intervals to get more of an idea. On the 45-minute chart, what do we see? Again, there were a lot of buy orders placed here. So you see price bounce back off the key 5,000 level. Like we said, it's a magnet to price. But then you see this big dip here. Well, something interesting happened in the world in terms of news along this dip. There was a bit of news, but Facebook banning cryptocurrency ICO ads, calling it deceptive promotional practices. Bitfinex and Tether got subpoenas from the U.S. regulators. So what that does generally causes FUD, and that what FUD basically is to the investor community. There's uncertainty involved, and so generally people pull out their money from it, and they just hold on to their money. They don't invest in coins. So Bitcoin dipped quite a bit when that happened, and as the wave of Bitcoin is what rides most of the coins currently. When Bitcoin drops hard, so do the other coins, and similarly, Lumen saw a nice dip in price, and it began to consolidate again. However, there were a lot more buys placed at the 50% level, and price had significantly dropped to a point where I think the whole community realized this is an excellent point to start making a bull run. And you see a pattern here, an engulfing, bullish engulfing pattern on the 45-minute chart. It's a multi-candlestick pattern, and I'll go over this pattern as well. And then if we go on the 15-minute chart, we see this pattern right here. So what you see over here, this part right here, what do you see these two candles right here on the 15-minute chart? This is also a triple candle pattern. I forget the name of it, but this is also a bullish sign. And the reason I showed this, and I'll come back to why I'm showing this, because you got to use all indicators in coordination with your other indicators. You can't just say, oh, I see one indicator, therefore it's got to be bullish or it's got to be bearish. And you might get away 60% of the times, but the 40% of the times where you get you are on the wrong end, if you don't manage your money the right way, you could easily blow your account. So let's go back to the 4-hour chart, right? And so this candle right here, when this candle formed, I said, all right, this is a sign. Like I said, this is an inverted hammer. I was curious to see what next would happen. What next happened, I got a Doji Candle, which is a neutral sign. I was like, okay. Then the current candle that's in formation is about to take an hour to go. But what did these candles mean? So I use babypips.com, and it's a forum for learning how to trade forex trading. I am in no way affiliated with Baby Pips. I am, this is just how I started learning how to read charts. Everything is free on here. I don't get paid from them, nothing. This is just how I learned. So I'm just passing that on. So anyways, so Doji Candles. So they show you single candle patterns and which signs are generally bullish, which signs are generally bearish. So the Doji Candle is a neutral sign, right? Hammer is what we're currently forming on the 4-hour chart right here, which is a bullish sign, right? An inverted hammer is what we already formed, which is also a bullish sign on the, if you can see right here, inverted hammer on the 4-hour chart. When we continue to go down, the bullish engulfing candle pattern, which is a double candle pattern, we saw this on the 45-minute chart right here, right? Which is also another bullish sign. And we saw the morning star. Now this is what I wanted to talk to you about. The morning star, we saw this on the 15-minute pattern, 15-minute chart right here, morning star, right? And that's also another bullish signal, right? But you got to be careful because you can't just say, oh look, I saw morning star here. It's definitely going to be a bullish sign, and you put in your trade, and then you see price drop. And you shouldn't panic. You should trust your signals, but also at the same time you need to trust it in coordination with your other signals. So all your signals should be showing a bullish sign for you to be comfortable putting that trade in, right? So you see this morning star in the 15-minute pattern. Then you go on out, you go to the 45-minute pattern, and then if you see another bullish engulfing pattern develop, then you go out to the 4-hour and you look and see, oh look, there's a inverted hammer followed by a neutral, followed by what looks to be a hammer formation with the long wick, right? Which gives us an indication, hey, we might be now experiencing our anticipated bull run to come up, right? And then we have to go look at volume because, you know, we talked about volume yesterday. Volume picked up, right? So a lot of investors are now getting back into it. So yeah, so all the indications, we're headed now into a bullish pattern. Let's see where this candle ends. No matter what, even if it dips back down, I think I've seen enough and I've explained enough that we will be seeing a bullish candle and a bullish pattern resuming. If not today, in tomorrow, and I'm pretty confident in that. However, you know, please do your own research as well. Again, on the daily candle, we see this nice hammer formation occurring. If it'll hold till tomorrow to close this candle, that would be great. Obviously, we have this, like I said, great magnet of level right here to suck price right back up here, which would be an awesome sign to see. And the stochastic RSI has approached the oversold level. It's at 17 currently, right? And we always said we wanted to dip below 20. If you want to be really conservative, dip below 10 to see an oversold indication, which means that now you can buy in because a bull run should be approaching. And we have the second half of our handle formation present, and we should be seeing an upward movement in price, and we have a candle indicating a bullish run. So things are lining up. So it seems pretty promising. Let's see. It's pretty exciting. It's definitely more encouraging than the previous days. So the game plan going forward would be look at the stochastic RSI, look at candle formations, and see if we continue to get appropriate candles indicating a bullish run. Look at volume, see if volume is continuing to pick up, and you can look at lower intervals for more assurances. Right now, it seems like we're headed on up to hit 5,000. What'll be key to know is because we rebounded back down from hitting 5,000. What will happen this time? Do we break past it? Do we break past it, touch this retracement level, come back, retest this level, and then break on top? That'd be a little bit more reassuring that we have bounced off this level. So that'll be what I'll be looking for. I'll be looking to see if we clear the 5,000 level, if we come back, retest it, and then break away from it confidently past a couple other levels. Or you can just put in the buy trade now. Like I said, all buys are pretty good right now, and you're definitely in a much more better position compared to the other levels. However, if you were engaged in these other levels with your buys, just hold, guys. Price is coming back to you. Just hold. Hang in there. We should be good. So exciting stuff. We talked a little bit about Japanese candles formations and how to use that in predicting price action. We talked about stochastic RSI. We talked about volume. We talked about key retracement levels. It's all about putting all of these together to make an educated analysis on your chart, and then seeing what the market does, and reacting to it. Always be open to corrections. Always be open to the news affecting the price, and act appropriately. And so that's all for today, y'all. So we'll see y'all tomorrow. Hope y'all like the video. Do like, comment, subscribe. Do give feedback, and we'll see y'all tomorrow. Peace.